this section, we are getting into the nuts and bolts of Bitcoin mining by diving into its main functions. And mining is one of the most complex components of Bitcoin. But once you understand it, it will allow you to use that knowledge to your advantage. So I like to use the analogy of Bitcoin mining as a worldwide lottery that happens every 10 minutes in the Bitcoin network, where hundreds of thousands of miners are competing against each other to win the prize by trying to find within 10 minutes the right lottery number. So there are three main functions that Bitcoin mining serves. Number one, adding a new block of unconfirmed transactions to the Bitcoin blockchain. Number two, creating new Bitcoins. And number three, securing the Bitcoin network. So bear with me now as we are going to unpack the Bitcoin mining process step by step. So each miner uses powerful computers designed specifically for mining called ASIC, standing for Application Specific Integrated Circuits. And once these computers are connected to the Bitcoin network, miners can collect unconfirmed transactions into a block when the lottery is open. So once a block is assembled, the 10-minute competition starts to find the lottery number. So according to the Bitcoin's consensus rules, miners must perform expensive calculations with their computers in order to add a block of transactions to the Bitcoin blockchain. And this system is called proof of work. And it has been implemented to prevent miners to create new Bitcoins for themselves out of thin air. So without proof of work, Bitcoin scarcity and value would fall apart as greedy miners could exceed the monetary supply limit of 21 million Bitcoins. So to incentivize the miners to act in good faith, the creator of Bitcoin, Satoshi Nakamoto, designed a prize to the Bitcoin network that is called a block reward. And the block reward winner will receive 12.5 Bitcoins along with all the transactions fees that they collect for their work. And 12.5 Bitcoins in yesterday's price is about 91,000 US dollars. So the block reward started at 50 Bitcoins in 2009, and roughly every 4 years, the reward has been cut in half until approximately the year 2140 to reach the 21 million limit. And after that point, miners will be rewarded with transaction fees only. So to compare with traditional markets, the monetary supply of Bitcoin is programmable and limited. So miners are like the central banks of the Bitcoin economy, but instead of having a single entity, there are thousands of miners that must comply with the Bitcoin rules to create new Bitcoins. So far we have covered how miners add new blocks with how they are trying to create new Bitcoins. So now let's dive into the last function, which is how mining secures a network. So if you want to take a look at what algorithm underlying the secure connection of your web browser like Google, you would see the name SHA-256 showing up, as you can see in these images. So as a matter of fact, certain US government applications also rely on SHA-256 for the protection of sensitive and classified information. And SHA stands for Secure Hash Algorithm, which is a cryptographic hash function developed by the NSA. And the Bitcoin network is using SHA-256 as well to secure transactions and let the network use the lottery number to verify within seconds the authenticity of a new block of transactions. So to secure the transactions, every block lottery number is intrinsically tied to two blocks, the current block of transactions and the previous one, which means if an attacker wants to reverse your transaction that you sent to your friends, it will drastically change the current lottery number. So the attacker will have to wait for the mining competition to open again and then find this new number before everyone else within 10 minutes. So to put things in perspective, to understand how difficult mining is, miners have a probability of 1 in a billion to guess the new lottery number, which is an enormous amount of calculations. And finally, the last element of Bitcoin security is the difficulty adjustment feature. So if a miner can find the lottery number below 10 minutes, in order to make mining a fair competition, the Bitcoin system will automatically increase the difficulty. So roughly every 2 weeks, so that there are at least a miner winning the block rewards every 10 minutes. So the bottom line is Bitcoin mining serves 3 functions: adding new blocks, creating new Bitcoins, and securing the network.